Hi guys, can you hear me? Perfect. Say hello from 82K. How are you guys doing? Let's wait for a couple minutes before we start. Okay, let's start. Welcome to the Grace Talks Web3. It's the 3-hour deep dive into today's crypto moves and then macro signal, as well as it's the story that shaped the Web3. And before we share the whole outline of 3 hours live stream today, don't forget to subscribe, hit like, drop a comment so you will never miss the next live session. And there will be the news, market opinion, and index that we are going to take a look together. For today's live streaming, I break down into 5 sessions as usual. The first session is gonna be the biggest crypto news of today. So there will be the Bitcoin price. It falls toward mid 80, and right now we are right here. Mostly the stick and let's candle. We have the price right here. It's at 82,000. So right now I am in the UTC plus 7 time zone, and it's almost 5 p.m. UTC plus 7. And yeah, earlier before this live, I researched the news. It was 85 each, yeah, 85,000 region, and after that 1 hour it dropped to 82.5. It's pretty fast. And so we will zoom out and see the market structure because it's weekends into the year end. And then after that, the second year there will be the Bitcoin ETFs register. It records almost $4 billion outflow in November, and we will see the Bitcoin sell off of 1x because they say mid-cycle holders driving downturn. So the whale will stay steady. And the fourth news that will be the details of Ray Dalio, that he owns Bitcoin, but he shows the nervousness about the quantum computing and the central bank adoption. For the last news among this time of the market condition. Only one token that is performing really well. It's ZEC. It's still surging. What is the reason why? So we will take a look at the metric that can explain it. And then the second section of this live, there will be the live market check-in. We will take a look at the crypto bubbles, CoinMarketCap, fear and greed index, Bitcoin dominance, altcoin season, top trending token, top 20 search, top 20 most visited coin during this week. And we will take a look at the Bitcoin ETF overview, and then we will take a look at the meme coin price index, and then we will take a look at the token unlock as well, whether we are having any popular token unlock this upcoming week or at the end of this week. And perhaps we will take a look at the vesting as well. And the third section of this live streaming, we will take a look at the market opinion. Two opinion that I share with you guys today is the Japan scene. Japanese government, they are taking the short and focus at crypto. So this is the first mover that Hong Kong must take a look at it. And then we will take a look at the second opinion, how prediction markets could create crypto's next billion user. And the fourth section of the live streaming, we will take a look of the activity, trading activity or deposit activity from our bank exchange. And the last one, five section of this live, we will take a look at the product research, because I have seen it a lot lately from CoinDesk, because I have looking around for the market updates on CoinDesk, and I see this sponsored research from GoPlus. So we will take a look what is this product or project, and how does the anatomy behind it, security behind it performs. And last section, we are going to take a look at the environment in Devcon, because I remember this week is the Devcon in Devconnect in Argentina. It's gonna be around November 17 until November 22. So we will take a look at the vibes, the environment, and the people in the Devcon right now. So this is the area that we are going to talk about. And before we begin, I want to highlight other link from my end as well, because apart from the YouTube that everyone can see right here is the Grace Talks Web3, we have the TikTok and X as well. So for TikTok, I just kick out the channels as well. So the idea of the content is going to be observations, random talks around Web3 and cryptocurrency, as well as the market update. I will share the detail on the link here in video, in photo. For example, this is the summarize. This is the top quote that I like from the book, and I will share it around wealth and leverage from this book. And I have X. Here we have the channel that I introduce you guys and encourage you guys to follow for the news and update in the crypto market as well as the Web3 in general for the overview. So let me drop the link for you guys as well in the chat. Okay, so the first news, let's begin with the markets. I have got this news from CoinDesk, and this article has been written by Sam Reynolds, and he's the senior reporter in Asia. And they put the headline as in BTC falls toward mid $80,000, but right now we are live streaming. It dropped to $82,000. So as the market structure weakens into year end, flow desk flag sustained sell pressure from old wallets. QCP notes a sudden hawkish Fed repricing, and derivative data shows downside positioning now dominating. Um, Let me search it again. What is the flow desk? Oh, market maker, capital market. Oh, from France. Okay. Yes, and then move to the idea that we need to know. Um, Bitcoin's price fell below $85,000, but right now it's $82,000, making marking a 7% drop in 24 hours and a 20% decline over the past month. So the market is under pressure from a heavy supply of coins moving from long dormant wallets to exchange. And the third bullet is derivatives and options data show traders are positioning for further downsides, but with puts gaining prominence over call. Let me take some notes. Okay. Moving next to the body of this article. So Bitcoin extended its slide Friday morning Hong Kong time, dropping below $85,000 and 500. So as the market absorbed a fresh wave of selling pressure and other another shift in global rate expectation. So the decline leaves BTC down more than 7% over the past 24 hours and more than 20% over the past month, outpacing losses across equity, which remains comparatively firm thanks to strong earnings from Nvidia, which fought off fear of an AI bubble. And this we can see the price dropping down in $85,000 earlier this morning. And in a note published on Telegram, market maker Flowdesk said the market continues to struggle amid a heavy supply of coins hitting centralized exchange from long dormant Bitcoin wallet with tens of thousands of coins moving after years of inactivity. So the wallet that has been sleeping for the long time started to have the movement, but they sold it, and these flows have overwhelmed the bid, keeping spot activity decisively skewed towards seller. And the firms add that managers are now positioning defensively into year end, more focused on protecting gains than adding exposure, which has thinned liquidity at key supports level. And more than that, Frodas also note that derivatives flow mirror the weakness in spot with large BTC and ETH buyers on the downside and traders rolling put position lower to maintain protection as volatility curves remain heavily tilted toward puts, and option data from Deribit shows a similar reversal in sentiment. CoinDesk previously reported with the once dominance $140,000 call now eclipsed by the $85,000 put, which has become the largest open interest strike in the entire BTC option market as traders reposition for further downside. And as the market continues its slide, all eyes are now on MicroStrategy's as BTC price edges towards MicroStrategy's average break-even point at $7,000, roughly. So, in a recent note, JP Morgan said the stock's underperformance reflects mounting anxiety over a possible removal for the MSCI index in January, a decision that could trigger billions in passive outflow and inject another layer of stress into an already fragile crypto market. And moving on to the Arthur news, saying Bitcoin ETFs have led a record at $3.8 billion in November. And what we need to know is US listed spot Bitcoin and ETFs see record outflows. Uh, and ETFs tied to SOL and XRP see strong uptake among market meltdown. And the 11 spot Bitcoin exchange traded funds listed in the US have collectively registered outflows totaling around $3.8 billion, marking the largest on record and surpassing the previous peak outflow of $3.6 billion almost in February. And BlackRock Bitcoin ETF IBIT IBIT I think BlackRock, right? Yeah, BlackRock is the world's largest publicly listed fund, has seen redemptions exceeding 2 billion this month, according to the data sources of social value. And on Thursday alone, these funds experienced outflows of over $900 million. It's the second largest single day withdrawal since these funds debuted in January 2024. And Ether ETFs have also faced record outflows totaling around $1.8 billion. So these figures reflect growing investor aversion toward the top two cryptocurrencies by market value, Meanwhile, recently debuted Solana and XRP ETFs have seen net inflow of 300 $300 million roughly and $410 million roughly respectively. So to sum up, institution lean more on the Solana and XRP ETF. I'm sharing the key takeaway to you guys. Downside positioning now dominating, and manager are now positioning defensively into year and more focused on protecting gains than adding exposure. Option data from Deribit shows a similar reversal in sentiment. Coin has previously reported with the once dominant call. And Okay. Sorry for the working message. Let's move to the next news together. We have right here a Bitcoin sell off led by mid-cycle wallets, while long-term wells hold firm. This is the comments from one egg, and the one egg say Bitcoin's downturn is being driven by mid-cycle wallets, while the oldest holders keep accumulating with futures data showing wash out market condition. So these are the area of the news that we need to know. First one, asset manager 1x says mid-cycle holder who last moved coin within 5 years are driving Bitcoin's latest sell off, and the firm says long-term holder remain steady while open interest and funding level point to reset positioning. And other analysis and other analysts cite OG selling October deleveraging and offshore trading volatility as additional pressure on Bitcoin. So, Bitcoin's latest sell off is being driven by mid cycle holders rather than long term whales. According to Van Eck, it's the mid November 2025 for Bitcoin Checkpoint report. Let's take a look at the report together. Change in well, holding by position size percent. And after this, the asset management firm said wallets whose coin last moved within the past 5 years account for most of the recent selling, while the oldest cohorts have remained remarkably steady despite weakening sentiment. One egg also note that coins that were last moved more than 5 years ago continue aging into the cohort and adding roughly around 200,080 BTC over the past 2 years, which the firm said signals that long-term conviction remain intact. And the report lands as Bitcoin trades near multi-month lows, and Bitcoin was recently around $86,000 at 9 p.m. UTC on Thursday, right? It was down around 3.2% over the past 24 hours and uh, 30, 31.2% below its October the 6th all-time high of 126,000 according to CoinGecko. So analysts have tied the broader decline to forced liquidations for the long-term holder distribution and heightened volatility across offshores derivatives market. So Nick Putin, Nick Parkerin, CEO of Coin Bureau, told Euronews that there have been several catalysts, but it seems as if the biggest driver are long-term sellings by OG. It's the uncertain economic climate and a mass deleveraging event on the 10th October. And he said older large balance holders have been selling for several weeks and creating a flood of supply hitting the market. Carol Alexander, she's a finance professor at the University of Sussex, told Euronews that Bitcoin's swing also reflects aggressive trading behavior on offshore platforms. So she said professional trading firms deploy order book strategies labeled spoofing or laddering, adding that such firms care only that the price moves quickly. And when Egg said the 3 to 5 years age band has fallen to 32% over the past 2 years as those coins changed address, a trend the firm links to turnover among cycle traders rather than capitulation by decade-long holder. And the report also highlight a reset in speculative positioning. Open interest in Bitcoin perpetuals has dropped 20% in BTC terms and 32% in USD terms since October the 9th, pushing funding rates to levels similar to past washed out periods. So smaller wallets that holds 100 to 1000 BTC have increased balance 9% in 6 months and 20% in a year as the largest well cohort trimmed positions. When X said the combination of long-term holder stability, cohort rotation, and futures market capitulation leaves Bitcoin in a reset state that has historically preceded tactical rebound. And apart from this, I have seen the details from Decrypt. They say Dalio owns Bitcoin as well, but he still is nervous about quantum computing, central bank adoption. So, uh, previously, the billionaire investor urged people to buy gold, and this article has been written by Andrei Bergansky from Decrypt. He's the staff reporter. Okay. Um, moving to the news. For the TLDR, three key takeaway. Dario reiterate his stance on gold against Bitcoin, and advance in quantum computing could hurt the digital asset, he said. So the previous metal doesn't rely on anyone or anything, he added. Uh, for him, he said Bitcoin was built for an apocalyptic world, but it still has disadvantages as a store of value when compared to gold. Okay, and anyone with an internet connection can safeguard the digital asset on their own, but those people who are still reliant on others, including the global network of machines, to process transactions, the billionaire investor signaled during the Thursday interview with CNBC. So this year, the previous metals price has jumped to record high on fear of currency debasement, which Dalio referenced in July when urging investors to hedge against macroeconomic risk around rising government debt in the US and abroad. So at the time, Dalio expresses a preference for gold, and on Thursday he reiterated his concern again toward the original cryptocurrency as far as its ability to stand the test of time or become used by central banks to facilitate international trade and stabilize economies. So he said, I think the problem with Bitcoin is that it's not going to be a reserve currency for major countries because it can be tracked and it could be conceivably with quantum computing controlled, hacked, and so on. So, last week, the Czech National Bank unveiled its first investment in crypto with $100 million spread across Bitcoin, stablecoin, and tokenized bank deposits. So officials say the TASE portfolio will help the central bank better understand how to handle digital asset, although it may be years before quantum computers are strong enough to crack Bitcoin's encryption. They have been growing calls for precautionary measures within the industry as tech titans like Google and IBM do breakthroughs. So, with transactions recorded a public ledger for all to see, tracking someone's Bitcoin is fairly straightforward once identity is linked to a digital wallet, pending the use of coin mixers, which obfuscate the source and destination of follows by pooling funds together. And let me search what does this vocabulary mean. Render ups. Oh, unclear. Obfuscate. Unclear. Obfuscate. Okay. And Dalio said a small percentage on his portfolio has comprised Bitcoin for a long time, but he estimates that it amounts to 1% of his overall wealth. In July, Dalio suggests that investors allocate at least 50% of their holding to Bitcoin and precious metal. So gold is advantageous as a store of value because it can be physically held without relying on anyone to provide anything. Dalio said, still he views Bitcoin and gold as hard currencies because their value can be debased by a government through money printing. Also, Dalio debasement concern are linked to rising levels of US debt, but he said several countries are also facing mounting deficits, including the UK and France, that could lead to what he described months ago as a debt-fueled heart attack. Oh, coming down and down and down. And so far this morning, from the Asia Morning Brief, among this time of the market, there will be only one coin ZEC that is rarely outpace what transparent on chain. This is the data that can explain. So I am curious and want to read with you guys as well. It's the Monero's network. Activity that reflects the real world demand for privacy coins, right? But Zcash spike looks more like a high beta market trade that is no longer tied to network activity. So we will take a look together. And this article has been written by Sam Reynolds again. And for TLDR, first bullet, it's the Zcash outperformed major cryptocurrencies like Bitcoin and Ethereum, but its user base growth remains unclear due to its privacy model. And the surge in Zcash's visible transactions was driven by a temporary event with no significant increase in new users. Okay, this is pretty skeptical. And despite Zcash's unique privacy features, Monero remains the dominant privacy coin, showing stable transactions levels. And for this article body, the Zcash has been one of the strongest performers of the year, outperforming major like Bitcoin and Ethereum during the recent market downturn. But behind the scenes, it doesn't look like the user base has caught up to its stratospheric rally. Stratospheric. Oh, I like this word. Stratospheric above, relating to the layer of the earth above, maybe extremely high. Stratospheric. Stratospheric. And so to sum up, the key idea is like the price has been performing very well, but there is no user base on the high level. So and so a growing share of activity now occurs within shield pools where addresses, amounts, and flows become invincible to public analytics. That means transparent metrics mostly capture exchange facing activity rather than Zcash full user base. So the only conspicuous search invisible throughput came from Zerdinos, an inscription wave that temporarily pushed daily transactions above $7,000. Transparent senders, however, stayed in a narrow 8,000 to 14,000 range throughout the event, suggesting the spike was driven by a small cluster of repeat actors rather than broad growth in new users. uh, Shielded activity cannot be measured directly, but it is unlikely to account for a sevenfold increase in transparent throughput on its own once the inscription wave passed. Transactions returned to prior range. So behind the scene, Zcash has been steadily migrating to be the orchard shield pool, and shielded supply has climbed from roughly uh, 1.2 million to more than 4 million ZEC over the past several years, and the share of fully shielded transactions has reached record heights, and unified addresses auto shielding and Sashi's default private UX appear to be pushing more flows into the shielded pool. These trends point to real private site adoption, even if they leave almost no footprints on transparent charts. If there were a broad surge in interest for privacy coins as a category, Monero would likely show it as well. And more than that, XMR remains the dominant pure privacy asset as its transaction counts capture all uses because every Monero transaction is private but still counted at the protocol level. So, yet Monero's throughput has held in its usual 20,000 to 30,000 daily transaction range. So, with no parallel rise in activity, that stability reinforces the idea that SATC moves is not part of a sector wide shift into privacy, but a Zcash specific rotation driven by its liquidity profile, shrinking visible supply, and an improving shielded UX narrative. So, Zcash and Monero are not directly comparable because their privacy designs differ, but neither shows an expansion in measurable user. Uh, but the transparent data for Zcash shows no clear uptick in new participants as well, while shielded activity remain intentionally hidden, with roughly around 30% of the supply now sitting in shielded addresses that cannot be held on exchange. So the resource supply squeeze is making the price move faster than the visible network can explain. And until those private site trends can be corroborated by user behavior, traders are likely paying a significant premiums of SAT and for the whole market movement. Bitcoin is trading near 86,000. So after giving back its Nvidia driven rally above $93,000, as well as for the Ethereum. Ethereum is hovering around $2,850 after slipping below $2,900. So as selling from FG Nexus added pressure for the gold. The gold is trading at roughly around 4,080 dollar after giving back its pre-NFP gains, setting about 7% below its October peak, yet still tracking toward a yearly increase of more than 50% for Nikkei 225. It's the Japan market falls 1.58% as harder October inflation reinforced expectation for BOJ rate hikes and officials voiced fresh concern over yen weakness. So this is the summarize of the market in general. And before we move next to the next phase, let's take a look at the Bitcoin price. It drops right now at 82,518 dollar right here. And after this, we are moving to see CoinMarketCap. Cap together. Mm. Mm. So yeah, I remember the whole market cap. Yesterday we were at 3.3 something trillion dollar, but right now the market cap dropped to 2.84 trillion dollar. It dropped to 7.03%, and fear and greed index is still at the same level as yesterday. It's 11, so the market is still in the extremely fear condition. And the altcoin season today, we have seen 28 out of 100, and the average crypto RSI, we have the oversold at 32.31st. Okay, let's take a look at the 10 trending token. We have here Bitcoin, Bitcoin, iOS network, Ethereum, Aster, Solana, Trump, Jupiter, and Avalon Labs, as well as Ola, XBT or AIO. This is the top trending token. And if we take a closer look of the crypto ETFs net flow today, every institutions moves the money out of the market, so it's minus 1,170 roughly billion. For Bitcoin dominance, we have right here 58%, Ethereum 11.5%, and other token it's 30.4%. And Bitcoin price right now it's at 82.4k dollar. Ethereum it dropped to 2.7k dollar. BNB it dropped to 813. Solana $125, and XRP 1.9 roughly dollar. And if we take a look at the crypto spot volume of today, we have right here at $490 roughly billion. Yeah, the institutions move the money out. BTC it shows minus $900 million, and ETH it shows $260 million. And if we take a look at the RSI, crypto RSI heat map, mostly it lean more on the oversold. We have number here, oversold 54%, and overbought it's just 0.8%. And if we take a look closer for the oversold area, I see BTC, ETH, XRP, so TRX, Doge, Hive, Link, XMR, Leo, LTC, Sui, Dot, CRO, Ton, Aave, OKB, Ondo, KCS, Juke, Cake, INJ, CFX, San, Syrup, Wall, Rune, FTT, Linear, Bera, OTC, Zeta, EDU, Ore, ENJ, KTA, ICX, and for the overboard, I see so little right here. We have the YM, Beat, NMR, APP, TNSR, but the neutral heat map, meaning in the middle between overbought and oversold, I see ZEC, Aster, Pi, XAUT, Stark, FTN, 0G, Track, Prom, Kosh, ARC, Giga, Band. And moving next to CD. Moving next to CD, popular search, and we see that on CryptoRank we have right here 20 coins search in the last 7 days. As of today, we have Celestia, Pi Network, Filecoin, Theater, Jupiter Arbitrum, Canon Network, Wrapped Bitcoin, Ripple USD, KuCoin Token, Cosmos Hub, USDC, Quant, Curve DAO, Stellar Cardano, Theater, Gold, Soy, Flare, and Hedera for the top 20 most visited coin in the last 7 days. In the right column, we have right here Bitcoin Monad, Starknet, Ethereum, Zcash, Solana, Aster, CK Sync, Datagram, Gabe, Aztec, Canon Network, Pyverse, Linear, Sui, VWA, Aurora, Safe Protocol, South Park, Sax Now, and Bob, top visited and top searched in the last 7 days on CoinRank. And then we will move next to see the Bitcoin spot ETF of the institutions or the company that sell. Mostly it sell. There is no company accumulate more Bitcoin today. The numbers in BTC total is 9.9 thousand BTC that the company sells Bitcoin today. Starting from GBTC, I cannot remember what is Grayscale. Grayscale dropped Bitcoin 2.2 thousand. IBIT strategy, I think. Okay, IBIT almost 4,000 Bitcoin. FPTC, it's Fidelity. So Bitcoin today, roughly 2,000 Bitcoin. ARKB. ARK 21 share ARK sold Bitcoin today 1,000 Bitcoin roughly. BITB, I cannot remember. So Bitwise, okay. Bitwise sold Bitcoin today 230,000. Oh no, 200, just 200. And HODL whole company it's 300. And EZBC, I cannot remember. EZBC, Franklin Bitcoin ETF. So they sold today 80 Bitcoin and BTC. It's sold 45 Bitcoin, so total it's 9,000, almost 10,000 Bitcoin. Moving next, we will take a look at the meme coin rank. For meme coins price indexes, for meme coins price indexes, we have today top gainers, Picker, Solana, and 2BNB K40, K403 on Solana. And top loser, it's SCKSL Solana, Blue on base, and Hound on base. Let's see the other meme coins. We have Shiba right here, Wolfi, PayPay, Wolfi on ETH and BNB, PayPay on ETH, Pump, Pol, as in Polygon, Worldcoin, Pengu, Official Trump, ABC Bonk, Floki is still performing very well. And to see a glimpse of token unlock, the DMC, what should be the popular token? Scroll. Oh, okay, we have Scroll today. Balance EPT, World of Legends, Haven 1, Zero G, Hyperlane, Magical Blocks, Godcoin, Cross. What else? Playbacks, Evil, Million. Okay, Tenet, GT Protocol, Wallet Connect, Cliff Unlock. Okay, and we have DeFi Network, Charges Finance, Myra, Axilla, Pathwords Open Campus. I'm sharing during the 7 days time zone. So GPT, we have it right here, friend tree, Renzo, and Lunfi Mia, Lunfi Network. And let's move Next to the market opinion. For the opinion, I have right here, the Japan takes aim at crypto. Just want to highlight as well. I've got this opinion article from this website, MY News. It's the opinion from Yush Harsano. He says Japan takes aim at crypto. It's the movement that Hong Kong must take a look. The Takaishi government's pro digital assets policies place Tokyo as a direct and serious competitor to Hong Kong. So this is the reasons why Hong Kong must take a look at it. Mere days after her election as Japan's new Prime Minister, Sanae Takaishi delivered a policy speech declaring that a major priority was to build a strong and resilient economy. Since then, her administration has ushered in rapid-fire series of policy to support digital assets with the goal of countering Japan's sluggish economic growth. And for this momentum, it has introduced a new dynamic in Asia crypto market, with Tokyo clearly no longer content to watch Hong Kong become Asia's premier cryptocurrency hub. Instead, Japan is positioning itself as a direct competitor, leveraging its deep credibility, massive retail market, and governmental support to revitalize its economy and reinforce its status as the global financial leader. And Hong Kong has made headlines in the past year as Asia's emerging primary destination, especially for cryptocurrency and other Web3 initiatives. Okay, so despite ban on cryptocurrency trading and mining within the mainland China, Hong Kong has shaped its own narrative as a digital assets hub. So this includes stable coin ordinance, approving an exchange traded fund that tracks the cryptocurrency token Solana and supporting programs such as the Cyberport blockchain and digital asset pilot subsidy scheme, which focuses on advancing Hong Kong based Web3 development through projects primarily focus on a real asset or RWA tokenization. So, as a result of these concerts efforts, right, Hong Kong has emerged as the clear leader within the digital asset space in the APAC, but there will be the regulatory environment that includes the high liquidity reserve requirements. So this can be a challenge. Licensing approval structure and stringent anti-money laundering laws. It has created significant friction for digital asset companies and investors too. So far, more than that, uh, Hong Kong's ever-evolving political and legal alignments with Beijing can create uncertainty for finance leaders who need a safe and stable regime to anchor long-term investments. So this area it provides an opening for Tokyo with its new prime minister and a new outlook as well on a digital assets, enabling Japan to bank on digital assets to usher in a new era of prosperity. So last month they reported circulated for the Financial Services Agency or FSA, Japan's financial regulators considering allowing banks to launch cryptocurrency trading services, including lifting a ban on banks buying and holding cryptocurrency for investment purposes. So these desire to increase the accessibility of digital asset tools for Japan's institutionals and retail users is a positive note compared to Hong Kong's cautious approach to granting participation in Web3 ecosystem, particularly as Japan has a reputation for being a cash-dominated society as well. So the momentum intensified on October 27 with the launch of JYPC. It's the first stablecoin pegged to the Japanese yen and launched by the startup JYPC. So this move follows a global push towards increased stablecoin use in light of legislation such as the U.S. Genius Act approved by President Donald Trump just several months earlier, and in the several weeks since the launch of JPYC, over 143 million yen or 920,000 US dollar has been issued with the issuer JPYC, even predicting stablecoin issuer. It could become major buyer as well for Japanese government bonds with this deepening domestic liquidity For this, on the November 7, FSA announced its support for a pilot project leveraging stablecoins under the Payment Innovation Projects. This pilot involves a consortium of Japanese financial institutions, including industry heavyweights such as the Mizuho Bank and Mitsubishi UFJ Trust and Banking Corporation, issuing yen-backed stablecoin via Progmat, Mitsubishi's blockchain platform as well. And this action highlights how Takaishi administration is enabling fintech experiment in Japan at a national level, enabling Tokyo to be better influence how money moves domestically. I see, because actually Japan can take uh, take US as the lead of the national adoptions as well in terms of cryptocurrency or stablecoin itself. So, uh, altogether, these steps highlight her government's willingness to align regulatory frameworks, banking enterprises, as well as finance and technology industry to push Japan as direct competitor to Hong Kong. As a cryptocurrency hub. This is especially as Hong Kong continues to balance its global market narrative in Beijing policy priorities. All in all, the coordinate ability of Japan to simultaneously enact regulatory frameworks while spurring digital asset innovation to enable further participation in Web3 speaks to Tokyo's strategy for pursuing economic growth, while Hong Kong remains Asia's leading digital assets hub. Japan's move to integrate cryptocurrency into its financial infrastructures uh, will encourage Web3 innovation. Let me take note. I really like this note. So Japan's stablecoin initiatives also present a significant challenge to Hong Kong. A robust yen-dominated stablecoin ecosystem supported by reputable Japanese financial institutions could rival Hong Kong's efforts to dominate regional tokenized finance, especially for cross-border settlement and international payments. So Japan advances a clear nationally supported digital asset strategy. It's increasing regulatory clarity may soon outweigh Hong Kong's early mover advantage. So Hong Kong is facing its most credible competitor yet in the race to define Asia's digital financial future. This is a very good one. moving next to the article on Be in Crypto. So, I am curious about the prediction markets, right? So, this is the area that we are going to tap. How prediction markets could create crypto's next billion user, because right now everyone keeps trying, using, talking about it, and for TLDR, in 2025, a quiet corner of crypto space suddenly exploded into the spotlight at valuations that would have seemed impossible just a year ago. And what was once a niche is now attracting billions and turning heads across the crypto world. What started as a small scale experiment exploded into headline making funding rounds in 2025, and uh, prediction markets have been quieter story in 2025, from being a highly niche, unknown category previously. Company in the prediction market space are blowing up, and they have now raised cash at bonanza $1 billion valuations to fuel their popularity and growth. So the most well-known are Polymarket. This party received a $2 billion investment from NYSE owner Intercontinental Exchange at a $9 billion valuation. And Cauchy raised $300 million. I want to take a look at Cauchy. This is so funny. Oh, I can try this. Fed decision in December, maintain rates, cut 25%. I think they maintain it. And how long will Bitcoin get this year? I think 60%. And this is the Cauchy. Okay, this is fun. So the platform that I showed you guys previously, they raised $300 million at 5 billion valuation, both in October, and prediction market players such as Opinion Limitless and Myrat have also raised or are seeing the user growth. So with this predicting frenzy in mind, the what happened next, the thing is, can these platforms, most of which are blockchain and crypto based, right, help bring in a totally new set of users? Could they bring blockchain to the next billion, the fever dream every crypto native seeks? So the path to predicting outdoor venues like Cauchy and Pole Market seem to have come out of nowhere in 2025 to the initiated prediction market actually are new to the scene. So this is the quote from Shreyas Agrawal, CEO of Pod, a layer one blockchain, says that they have been around in a crypto for quite a while, And we had Genesis and Augur, which were some of the early ICO companies that tried it. And in August 2015, Augur raised 5.5 million US dollar in an ICO. In April 2017, Genesis raised around $12.5 million with their ICO that sold out in 10 minutes. And Augur is still chugging along with its V2 launch, supporting the DAI stablecoin and its wrapped token, reaping the past year. I haven't seen Augur before, so I want to take a look. Prediction market. Okay. Seems like the product is not fully ready to try. Uh, for this, it pivoted away from predictions to its highly lucrative Safe multi-sig wallet, which scored 100 million in funding in 2022. And during the first Trump administration in 2020, Karshi was able to gain approval from the CTFC to be a designated contract market to trade event contracts. And while Karshi runs on a closed system instead of blockchain, this approval paved the way for on-chain prediction market. Polymarket, founded in 2020, uses USDC on Polygon and is really the first on-chain prediction market to change the blockchain games. And this is the investor saying about the Polymarket. What we are truly witnessing is the emergence of a new design space for financial and informational market. So this is how to grow the market access. This emergence is being powered by a river of money entering into prediction market platforms. So the beginning of November, total national volume trade on prediction market gets a record high at $3.3 billion according to the data aggregator on Dune Analytics, and Karshi had around $1 billion. Polymarket approximately $1 billion, and the just launched BNB chain-based opinion led the way with a $1.4 billion. So let's take a look at the prediction market national volume, or notional, sorry. This is opinion Polymarket, growing very well. The second top product must be Karshi. So Polymarket seed investor named Pan sees this rising opportunity as a sign of traders recognizing the brand new financial markets that this venue can unlock. And he told me in crypto that there is a greater market access story here. And Sportsbook, for example, do offer some political betting option, but the menu is often quite limited to a book's low appetite for risk. So, in contrast, prediction markets tend to financialize event of all type. Previously, Pan says the average individual investor could not easily bet on whether the Fed will cut rates, whether a certain position will win in a particular market, or even whether Tesla stock will go up or down, depending on where they live. So, what's next? Uh, New category in the prediction market space are continually developing. One of these gaining popularity are mentioned markets, where bets are placed on where celebrity or other public figures say. Coinbase CEO Brent Armstrong recently read through a list of words in a market for him on his company's earnings call. Crypto social media voraciously ate it up. So the next frontier of prediction markets, bringing in users to crypto who don't know they are using crypto, right? This is the quote said from Vincent. I think what's more powerful about Polymarket is that they don't even carry obvious crypto branding. And the idea is that if Pentagon area pizza joints get busy, it might mean some even might be cooking up as employee. They are too busy to worry about food and just order pizza. So the holy grail for crypto, at least among enthusiasts, is getting billions of users adopting blockchain. So an on-chain prediction market really bring in crypto next billion. Yes, I think from the data that I can see here. So right now, these blockchain-based prediction market are only cultivating hundreds of thousands of users on weekly basis, around 274,000 in the previous week. This based on the Dune. It's still early. It's also clear that this market and the number of venue will grow, and we will likely grow due to the number of markets available, nodes, pods, gravel, or basically any kind of information that exists on the internet or could exist in the future can become the basis for a market. More markets to predict on could become akin to new tokens, building fresh narratives that often bring users to blockchain. And blockchain infrastructure is getting good enough that user may not even have to know crypto is being used on the back end of these prediction markets as this value grows. As Coinbase brand Armstrong said on X in the previous month in October. So in 10 years, many more people will use crypto, but they may not know they are using crypto. I'm finding the trading campaign. And to share with you guys the trading campaign, the activity right here that I share, it's to deposit and get 20% bonus plus extra rewards. So you need to transfer to the futures account, and then you will get up to 200 USDT bonus, and then you can trade more to earn up to 200 USDT as the extra rewards. And this campaign we are having around 2 weeks. It will end on 13 December, and we are going to and the rewards will be distributed every Monday, every Tuesday. No. Every Monday, every Wednesday, and every Friday. So overall, you need to register as well, because this trading campaign is tailored for the KOC, and it's under community specifically. So if you cannot register, you won't be eligible to trade. So check it out and have fun trading. So we are moving next to the GoPlus research. we are going to dive deeper for this report together. Mm, the report came out 5 to 6 days ago, and I saw this report at the bottom of the news that I have been digesting, and I am curious because since they sponsored the CoinDesk to research about themselves, write about themselves, and I see the cover every day. So why not? Let's just take a look at it together. So it's the security protocol that I have seen. So far from the website, it's the decentralized security layer for Web3. They have token scan at this number, user log token, supporting chain, this number, and the name of the investor are Big Swan, Binance Lab, OKX, Hashkey, Fenbushi, Quantstamp, Animoca, Avalanche, Crypto.com, Wave, Halby, Neo, Richard Moore, all as an individual, TSR as well as Ash Crypto. It's gonna be a long road, but let's take a look together. So far, this is the key idea that we need to know. First one is the as of October 2025, GoPlus got the revenue for $4.7 million in the total revenue across its product lines, and the application is the primary revenue driver, contributing around $2.5 million. So if we think about it as a percentage, it's 53%, followed by the Ceph token protocol at $1.7 million, and GoPlus Intelligence Token Security API averaged 717 million monthly calls year to date in 2025. It's the peak, nearly 1 billion calls in February 2025. So total blockchain level requests, including transaction simulations, average an additional 350 million per month. And since this January this year launch, GPS tokens has registered over 5 billion in total spot volume and 10 billion dollar in derivatives volume in 2025, and monthly spot volume peaked in March 2025 at over 1.1 billion. So derivatives volume peak at the same month at over 4 billion. This is the revenue and achievement that GoPlus get for For this report, the CoinDesk team they provide a comprehensive of the GoPlus security, a decentralized Web3 security infrastructure they designed to deliver on-chain real-time protection for user, developers, and protocol. This report it has been commissioned by GoPlus and produced by CoinDesk Research, and it examines the network's multi-layer architecture, including the security data layer, security compute layer, and Segware protocol, as well as its core product suite of GoPlus Intelligence, Safe Token Protocol, and the GoPlus app. So it offers a neutral technical and ecosystem level assessment of GoPlus's design, token economy, and strategic roadmap, with particular focus on its roles in advancing decentralized AI-driven security solutions and building a scalable security layer for Web3. And what I am going to share with you guys is I'm going to touch for the core idea of the product and their roadmap. What are the solutions to the problems in general, and perhaps maybe the team behind it as well. And I'm not gonna touch a lot for the tokenomics. And let's move to the executive summary. Okay, how shall I share? So this product launched in 2020. It's the Web3 decentralized security infrastructure built to provide real-time protection against on-chain threats and enhance transaction integrity across the blockchain ecosystem, and be positioned as a security layer for Web3. So GoPlus operates across 40 blockchain, whether it's Ethereum, BNB chain, Solana, Optimism. They have the modular architecture comprising the security data layer, security compute layer, and SECware or Segware protocol. So combine this, it will have a trustless, data-driven intelligence that can identify and mitigate threats across the network for the users. And for the product that include GoPlus app, they are the one-stop security hub for user. They have safe token protocol that can standard secure token issuance and liquidity management. And the GoPlus Intelligence, it's a collection of the AI powered APIs and SDKs that can deliver security data to developer and wallets and institutions. So the products that they have, they integrate across Web3 ecosystem, including the big platform, Binance, MetaMask, and Trust Wallet. So this year, GoPlus introduced the native token GPS powers and staking, computing, governance within the network. And token underpin the ecosystem incentive model, enabling access to security services, rewarding contributor, aligning stakeholders, and aligning through staking services, rewarding contributor, and aligning stakeholder to staking and slashing mechanism. So as of the Q3 in October 2025, this year, GoPlus generated $4.7 million total revenue across these three product lines, led by the GoPlus application. So, looking ahead, GoPlus aims to strengthen its position in a decentralized and AI layer for Web3. They will advance sequencer level risk control mechanism, expand cross-chain integration, and launch their own governance portal to enable community-led decision-making through continued development of its AI-enabled security tool and compliance with frameworks such as the EU MIGAR, and GoPlus can seek the contribution to a safer and more transparent blockchain ecosystem. This is the executive summary of this all of this research. They have architecture as well. I try to finish GoPlus today. If I cannot finish, I will wrap up. And I think we need to move ETF Devcon to next live. And okay, introduction of this research. So the digital asset industry, they have witnessed a remarkable growth in the recent year, and institutional participation has accelerated with the launch of spot Bitcoin and Ethereum ETF in the US. So this growing trend of publicly listed company integrating digital assets into their corporate treasury. For the retail front, participation has moving up with the total number of DeFi users expanding more than fivefold to 294 M since 2024. So this influx of the user and capital, however, has also brought heightened risk by the first half of 2025, and the total value loss to Web3 hacks and security incidents has already surpassed the amount record through 2024, continuing an alarm upward trend. So, one major reason behind alarming frequency of security breach in Web3, and it is multitude of pitfalls and user encounter throughout this experience, which continues to impede the sustained adoption of native Web3 applicant. Let's take the AI to this context. Okay, summarize the the okay, we'll dig a little deeper on this infographic together. But to summarize the content of the research introduction right here. We have the key idea from the ChatGPT, massive growth in digital asset and Web3 adoption. So institutional activity is rising through Bitcoin, Ethereum spot ETF, and corporate treasury allocation. So retail participations had exploded, with DeFi users growing 5x to nearly 300 million users in 2024, and then the rapid growth has amplified security risk. So risk to lose from Web3 hacks in early 2025, it's already exists of 2024, and the security incidents threaten sustainable adoption of Web3 application. So the risk is the Web3 users face a wide and unique set of risks. So private key loss, rug pulls, address poisoning, phishing, and self-approval or protocol exploits. We can raise the several coin defects, vulnerabilities in projects or protocols, and these risks are layered and more severe than traditional Web 2 threats, and lack of foundational security infrastructure. Web 3 has no OS level protection equivalent to Windows Defender, and the non-custodial wallets increase exposure. So there will be no fraud protection, no reversals, reversible losses as well. So fragmented and insufficient current security solution that focus mostly on the audits, right? Mm, before the deployment or the forensic investigation after the incident, there is no unified real-time security layer to detect threats as they happen, and urgent need for proactive real-time security. So Web3, it requires dedicated systems capable of capable of identifying the vulnerabilities and blocking risky action instantly. So this gap is GoPlus security aimed to fill, creating a continuous real-time protection layer for all Web3 users. So this is the level of the hack that only first cohort, the numbers is jump even higher than the hacking incident in 2003, 2023, and 2024. And this is the Web2 user security issue. Malware, Telegram, and solution is they provide is to anti-phishing and antivirus software. So they combine the solution of Web 2 and Web 3 together to be GoPlus. And I will need the ChatGPT to summarize the architectures as well. Oh, just this before we move to security data. Okay, so far from this paragraph that talks about architecture, uh, the product is decentralized, multi-layer Web3 security network. So the product can provide real-time risk data through APIs and SDK. User can interact safely across Web3. And there are two core layers to power the system. First, it's the security data layer. Second, it's the security compute layer. For security data layer, they aggregate and verify race data. For example, it is the malicious contracts, phishing domains, exploit history, and the the layer itself, it has open to contributions from users, researchers, and third-party organizations. And and from the foundations for accurate security detection. And for the security compute layer, performs real-time analysis using AWS as in actively validated services. Operators distributed nodes run security computation and validates analysis results, detects threats, and simulated transactions. And the product is, the architecture is open, permissionless. Developer can join freely and build security solutions tailored to various transaction stage, anti-scam, anti-phishing, anti-MAVE, and SEC where it's an ecosystem enables modularity or enable modular security deployment. So it's the independent developer that can build security modules on top of the core layers and validate modules integrate into the GoPlus security modules. And also the GoPlus security modules is the user facing gateway. So they connect infrastructure level security capabilities with real applications and wallets. So they make validated security modules instantly usable across the ecosystem. And further security data lawyer. Okay, moving next to the security data layer right here. What is the key idea? So they say the security data layer is the foundational backbone. So it can manage how all security data is contributed, verified, stored, and trusted across the network. And data is crowdsourced from a diverse contributor community, include the end user, security researcher, or cyber security firms as well, who submit the intelligence on token races, malicious wallet addresses, NFT related risk, approval permission risk, or the app security assessments, phishing website URL. And these things are still going on to gather the contributors' feed, ongoing real-time updates on emerging threats, ensuring the system remains current and adaptive. And GoPlus use a decentralized multi-tier verification framework to ensure data quality, and the system validated contributed information through two layers. So previously it was the primary verification layer, right? And the second it was the secondary verification layer. So this structure help maintain high accuracy and trust in the security data, and the result is a very robust community-driven threats intelligence network. So the security data layer enables trusted, scalable security insights that power the broader GoPlus ecosystem. So if there is the next layer is the security compute layer. So the key idea is they handle real-time security, computation, and response. And three main components that make up the compute layer is the GoPlus security module, Segware AWS Manager, and GSM perform real-time transaction screening, and SEC where AWS provide modular decentralized execution, and AWS Manager ensures network integrity and operator accountability. So overall purposes, the compute layer unifies real-time transaction analysis, modular security services, and decentralized operator coordination form into the operational engine of GoPlus security network. So let's have a quick look of the SECware protocol because it is the main service, main element, backbone of the GC Plus. Okay, from the whole paragraph here, we have the key idea that SECware protocol gets a modular developer-driven security ecosystem, and SegWare can run a Docker-based model across decentralized compute nodes and user-managed security services through SEC Hub, and revenue is pooled and distributed based on real SegWare usage. And staking ensures developer accountability and overall purposes. SECware creates a decentralized marketplace for security services. It encourages innovation, ensuring quality, and giving user customizable on-demand protection. They have the security mode right here and product suite right here. They have token security, transaction simulation, AML and compliance, malicious address, NFT security, the app security, approval security, and phishing website detection. The stats daily active user, wallet address, TVL logged in, token locker, number of SEC have created, and the chain support here. Total revenue 4.7 mil. App services revenue. SAF token, SaaS subscription 0.5 mil. Look at the ecosystem analysis. So, okay, they have support network right here. Ethereum Avalanche, BNB, Sui. Joey, this is the new one. I haven't heard about it. Polygon, Bera, Linear-based Arbitrum, and this wallet. Binance, SafePal, Crypto.com, BitGet, Trust, Zapper, Gate, OKX, Bybit, MPC Vaults, OneKey, Backpack, and centralized exchange in Binance, OKX, Bybit, BitGet, BingX, Crypto.com, Gate, Maxi, and DeFi. They have SushiSwap, Citus protocol for meme, HyperSwap, Li-Fi, Matcha by 0x, and trading platform as in Gecko Terminal, Dex2, Dex Screener, Bird Eye, Alpha Trace, TMGN, and for security, Slow Mist, BlockSec, Certic, Bytrace, Scam Cipher, Cipher O, and for the analytic, either scan CoinGecko, CoinMarketCap, Footprint Analytics, Agent5. Footprint Analytics, I have seen them like since 2021 or 22 around here, but I don't do the marketing, but still being in the market, I have their logo for a long time. And then moving to see a roadmap. Coming out into the market in in the 2022, launched intelligent in 2022, or coming out into the market in 2020, and then launched GoPlus security in 2022, and then released malicious address, released SDK, released GoPlus app, network layer, GPS token, GoPlus launch, GoPlus security, release security data last month or last quarter. Token, I skip token, it's very complicated. Okay. This is the token traded on Bybit, and then others, and then mostly on Binance. Token monthly derivative volume in Binance is performing, and then OKX. And okay, let's see what is the conclusion of GoPlus. They have 8 key ideas. So GoPlus solve Web3 core challenge, trust and safety, and then its architecture creates a proactive scalability security framework, and GoPlus has broad ecosystem reach, and then innovative trust models and smart contracts mechanism, and GPS token is central to the network's economy and operation, and roadmap emphasize decentralization and AI-driven security, and future significance depends on becoming a shared security layer for Web3, and it's the long-term success factor that they are doing here. And BTC dropped to 8,081K. That is crazy. So, coming down and down. And or to share with you guys more about this channel, I put it as the name GraceTalksWeb3. It's the 3 hours of crypto, macro, and Web3 alphas. And don't forget to subscribe, hit like, and comment to talk with me. uh, the section of the live I break down into to 5 or 6 sections on daily basis. We will have first one is the top crypto news of the day. It can be like 3 to 5 mega news about cryptocurrency, and after this we will move to see the live market check-in, whether we will take a look at the crypto bubble, CoinMarketCap, Fair and Great Index, and Bitcoin dominance, right? So we'll see Altcoin season index, top trending token at the moment, and see top 20 most searched coin from during this week from the CryptoRank, and we will pan the camera to see the Bitcoin spot ETF net flows, and see the meme coin index, see the token unlocks and wasting as well. And the third section, you will see market opinion and macro view, like pick up the brand of the big people, the key player in this industry. What do they think? What are they doing to make crypto industry in a better level? And we will see the product research. For example, in the today's live, we take a look at the GoPlus security. Initially this today I have the idea to share the Devcon in Argentina, to share the environment, the builder energy. So I think this area we have to move to talk into the next live, and don't forget to subscribe and hit like or drop me the comment. Before we saying goodbye to each other, I just highlight with you guys again that I have TikToks as well. Grace from BKK and DX as well, that share the same name. Grace Grace from GraceTalksWeb3.com, based on this link. Okay, I just verify it later. And yeah, this is my channel. Don't forget to click like, subscribe, and comment, so you guys will have more information to digest. And thank you for coming to see this live together, and have a good day, have a good weekend. I'll see you again on next Monday. Bye.